The chart that you're staring at right now should scare you a little bit because it scares me enough to get out of bed on a Saturday and make this video for you guys. Look at this. The total assets on the Fed's balance sheet spiked up tremendously just recently with the failure of several banks and the Fed basically stepping in, printing a ton of money to sort of paper over this event. Now, this is nothing new. This is what the Federal Reserve did in 2020 when we had the COVID pandemic and many businesses and sort of operations needed to be bailed out. Well, it seems like the printers are back on, and this is scary stuff if you are watching the inflation numbers. We've had a nice trickle down. In fact, I'll show you guys that. If we go over here, if I can get out of this. Yeah, there we go. If we go over to the inflation marker on the Edgefinder for a second, I want to show you something very interesting. If we scroll down here, and I'm just going to look at, I just want to look at just the US for a moment. And when we pull this chart up, you can see that inflation had peaked in June of 2022. Inflation since then has been on the decline. Well, with again, remember that balance sheet that I just showed you was on the decline as well. Well, recently there was a tick up, and this, guys, is a really tough spot for the Federal Reserve as well as the markets as a whole. And that's why, again, I want to go through this together with you guys to show you some really interesting stuff going on right now. Okay, so how did the market respond to all that stuff I just showed you? Well, let's look at gold here. As a starter, many of you guys who are forex traders and you focus on gold as well as other assets impacted by the dollar, like you can see the market's reaction. It is a crazy reaction. We saw gold trade from 1810 for a while, it was hovering in the 1800s, to dramatically tapping on the door of the 2K mark, which is incredible for the gold market to do in such a short period of time, as of course gold tends to be sort of a back and forth asset. I know that of course forex traders love to leverage and trade this thing on the lower time frames, but from the stock side of things, I've been a stock investor and trader my whole career in finance. Well, gold is generally looked at as a very boring asset. It's funny to see that crossover when you go into forex, and traders love to trade gold because I guess proportion to currencies, gold moves a whole lot more. Anyways, what I wanted to show you guys here with all this stuff is that what's our take on gold? Are we supposed to be buying gold when it is trading around just under $2,000? Or is this thing, overblown and the Fed hawks are going to come in this week? Again, we have a meeting this week, I believe, which should be impacting to the markets. Well, I'll give you guys my take on it. And before I go through gold and all this stuff, let me just show you a market that we don't pay attention to a lot on the channel, but maybe we should for this event. Bitcoin. Look at Bitcoin, guys. Bitcoin trading from 19.8 all the way up to 27,000 in just 1 week. This is an incredible move for the Bitcoin market. Of course, you've also got Ethereum rocketing higher on this and breaking through the previous highs. And this makes sense if you think about it too. Why would Bitcoin be up? Well, again, if the printer goes burr, as they say, if the printer begins printing more money, which they've started here to sort of cover the event with the banking situation and potential collapse, we're seeing those printers being forced back on. And I don't know if you've ever paid attention to crypto and wondered, hey, why did it go just absolutely to nothing during all of the crazy 2020 stuff or post 2020 stuff? Well, it's because during this time, guess what was turned on big time? The printers. Jerome Powell, the Federal Reserve, they were printing so much money to put out stimulus checks. And guess where that stimulus check money went? It went right into Bitcoin. And it went right into Bitcoin here in the last week. But guess where else it went to? Again, it went to Bitcoin. The money here, I'm sorry, not Bitcoin. It went into gold, right? So Bitcoin shot up, but so did gold, and for the same various times. So there is some connection between these two assets. When the printers are on, we usually see gold rallying and we see Bitcoin rallying. So what's my take going into this week, which was a very loaded week, talking about, of course, the Federal Reserve coming in and making up their sort of position, whether or not they're going to be hawkish or more dovish and pause the rate hikes. Well, again, right now, the market seems to think that overall, the Federal Reserve will have to pause their rate hikes. Is that going to be the case? We'll have to wait and see. My personal opinion, and if for my 2 cents, is I think that the Federal Reserve will be more hawkish than the market suspects. Now, will they have to address the situation? Yes. And will that cause some potential bullishness on things like gold and Bitcoin and possibly even the stock market? Yes. But is it going to be, hey, 0% interest rate hikes going forward? Well, I don't know that is going to be the case. I think personally, when looking at a chart like gold, of course, I'm not going to be buying up in these areas, but there is an argument for a bullish case on a possible retest. So I am looking at 1930 as a possible re-entry point for those of us who have missed the move, myself included. It comes around this 1925, 1930 zone between the 50% retracement and the 61.8% retracement. If price comes down into those zones here throughout the week, perhaps we get a slightly more hawkish Federal Reserve. There's an argument for a possible buy trade setup that, again, could eclipse the high and take them out and even go further, as the Federal Reserve maybe has to step down from its ultra hawkish stance. Now, again, this is a tough situation because you might say, well, Nick, there's no chance they step down from their hawkish stance. They have to raise rates. Otherwise, that inflation goes out of control. Well, again, the Fed is stuck between a rock and a hard place. They have the economy and banking situation potentially on the verge of collapsing, and they also have inflation running rampant as another counterpart. So they have to pick the least of two evils. And my personal opinion is that it's going to be somewhere in between is the best bet that they can make. I think that they may pause their super hawkish rate hike plans, but rate hikes are still coming. That would be my take. That sort of matches up with the market. The market expects maybe a little bit more of a rate hike right now overall, but then things to start to cool off on the rate hike cycle stuff. Now, again, we'll see if that plays out. I'm not a fortune teller, but my personal opinion is that gold looks interesting. If I am going to take a trade, it's going to have to be on a pullback looking for a continuation. And let me add some more confidence to this idea that I have on gold. So I'm going to go over to commodities. I want to show you the gold chart here on the Edge Finder. And this is really interesting. So the Edge Finder has gold as a possible buy trade. Now, this buy signal was generated about a week and a half ago. I didn't take any trades on gold. Obviously, shoulda, woulda, coulda in hindsight. But again, we have newer information now that the Federal Reserve's hawkishness is being threatened into potentially dovishness, or even just at the very least a pause on the hawkishness, which could leave gold's price relatively cheap should we see a pullback, right? That would be my take. Despite that, we have gold as a possible long due to the COT data showing us institutional money is very stacked on the long side. Retail sentiment, however, is on the flip side. They are shorting the gold market. A very interesting stance considering, again, the massive run up, and sellers are mostly, at least on the retail side, they're mostly sellers, which can be a useful indicator to potentially look to go against and be in the minority when it comes to the amateur crowd. So again, some bullish signals here coming from the Edge Finder. And just to show you guys that in bigger detail, when we go over here and we look at commodities, you can see gold, just how strongly polarized this market is. You have retail traders very heavily on the short side, whereas again, we go look at institutional money, we go to the smart money tracker, and we can see that gold here, 65% long. It's quite interesting to watch play out this way. By the way, guys, the Edge Finder is our market software. I run a company. We build data for traders to try and add insights and more details to traders. If you're looking to get access to the Edge Finder, it is currently available with a discount if you use code YTVIP. The link and information for that will be down below in the description. If you'd be interested in getting access to our software, all of the information will be found down below. So check that out for yourself. I thought this was a pretty important video to make going into a very, very big week ahead. One more thing. Again, I mentioned briefly that perhaps the S&P 500 could find some level of a bounce here in regards to all of this. That chart that I showed you. Remember this one? Of course, the spike up. This printer. It is all about going into next week whether this print scenario is going to spike up again, or if it's going to sort of fizzle out and just be a pop along the overall downward trend. Again, if we're doing a technical analysis on this actual chart, I'd probably draw a 50% retracement as a pretty healthy, middle ground, which is somewhere around here. So, hey, that's just for fun on your Saturday here. Hopefully my videos are helping you. It really does mean the world to me when you guys comment your thoughts and let me know that the videos are helping you in some way, shape, or form. Thank you so much for watching, and have a great rest of your Saturday. Have a great weekend. I'll be back tomorrow with more analysis for you going into this week to keep you guys informed on the latest. Thanks for watching.